Again, you have to have that balance of having the most deliveries and better profit margins. That's really why we have seen a huge premium when it comes to Teslas, because they are able to profit a lot more from their cars in the United States at 18 to 19%, rather than some other EV or hybrid players that are only making around 5% or 6% margins. Obviously, they need to sell more to be a little bit more profitable, so it's a double-edged sword. But Tesla is definitely taking it in stride, continuing to ramp up production in China, and hopefully we will start seeing an end to this price war and more price stability. This will provide investors with more ease and calmness regarding Tesla's future outlook in both the near and long term. Investors that invest in Tesla are really bullish on this name, and I continue to talk to them daily. Over the past few years, Tesla has not only disrupted the electric vehicle market, but also made a significant impact on traditional automakers. From affordable models to more premium electric vehicles, Tesla's pricing has been strategic and innovative. Price optimization benefits alternative companies more than any other industry. However, it is frequently an extremely difficult task. The truth is only about 10% of consumer brands have a successful and high-growing pricing strategy, and Tesla belongs to this small proportion of automotive companies. This is what makes the automaker stand out above the rest in the EV market. In this video, we're going to explore Tesla's approach to pricing, how it's changing the game, affecting its competitors, and influencing the entire automotive landscape. With that said, let's get started. Speaking of travel, let's check in on some of the EV makers. Tesla shares are trading higher today after data from the Chinese Passenger Car Association showed that Tesla sold over 84,000 EVs in China in August. That marks a 9.3% increase from a year ago. Sales of Tesla's China-made Model 3 and Model Y cars rose over 30% from a month earlier. This is good news for Tesla, especially considering the competition in China leading to the pricing wars across the sector. Last week, Tesla once again cut prices for its Model S and Model X in both the US and China. We'll see how that impacts demand and margins moving forward, but so far, it seems to be good. The sentiment here, at least more broadly from the street, has been that they're willing to sacrifice some margin pressure in the short term to gain market share. This is crucial for Tesla, not only in China, but also in the US, looking at recent sales numbers. Li Auto, a huge domestic competitor in China, delivered nearly 35,000 cars in August, up 663%. Tesla's business model is adaptable and scalable. The EV maker is constantly innovating and launching new products and services, such as the Robotaxi, the Semi, the Roadster, the Powerwall, and the Solar Roof. It is also expanding production capacity and global presence by building new factories in places like Texas and Germany. Tesla is growing its market share in China, the largest and fastest growing EV market in the world. Hey guys, welcome back to Tesla Tomorrow. Tesla's price declines are consistent with its long-term strategy. In its early years, Tesla concentrated on making high-end cars at premium prices to demonstrate the viability of its technology. However, things are changing as Tesla now plans to make its vehicles accessible to a wider range of customers by introducing mass-market models at lower price points. With increased production capacity, Tesla should be able to reap efficiencies of scale, making it more competitive against rivals. If you like this type of content, hit that like button, subscribe, and turn on post notifications to stay updated on everything going on with Tesla. Tesla has revolutionized the automotive industry with its innovative products, services, and business model, which is based on three main pillars: direct sales, servicing, and charging network. These pillars give Tesla a competitive edge over its rivals and enable it to create value for its customers and shareholders. One important aspect of a business is its pricing strategy, which can make or break a company's financial position. Tesla, like other companies, analyzes market demand and customer behavior before deciding on prices. The consequences of these rapid and recent price cuts have already been evaluated by Tesla. Tesla's direct sales model allows it to bypass the traditional dealership system and sell cars directly to customers through its own showrooms and online platforms. This way, Tesla can control the quality and pricing of its products as well as the customer experience. Tesla's direct sales model also helps it avoid conflicts of interest with dealers who may have incentives to promote other brands or discourage EV adoption. This makes people choose to buy Tesla. Beyond the present moment, Tesla is planning to make cars suitable for the future. The automaker collects valuable data and feedback from its customers, which it can use to improve its products and services. Tesla offers remote diagnostics and over-the-air software updates, reducing the need to visit service centers. This servicing model enhances customer loyalty and satisfaction and generates recurring revenue streams. Overall, Tesla cars are beautiful, fun to drive, and safer and smarter than conventional cars. They have the highest safety ratings in their class and are equipped with advanced features like autopilot and full self-driving, enhancing convenience and comfort for drivers and passengers. Although Tesla and its CEO Elon Musk are known for exaggerating timelines, Musk isn't alone in recognizing the potential of the company's products. Tesla's robotaxi fleet could revolutionize finances and potentially catapult it to become one of the most valuable companies in the world. ARK Invest, which has some of Tesla's biggest fans, recently released a report highlighting findings from a Monte Carlo simulation. The results included a bearish scenario, an average scenario, and a bullish scenario. ARK Invest hypothesized that successful implementation of robotaxis could generate between $200 billion in a bearish scenario to nearly $613 billion in a bullish scenario. Even in a worst-case scenario, where Tesla robotaxis produce just $200 billion in annual revenue, it would be a massive contribution to Tesla's overall valuation. For a long time, Tesla has had an undisputed command of the electric vehicle market. As other automakers ramp up production efforts, Tesla will now have to deal with a different industry environment. However, this doesn't mean that its competitive edge and advantages will disappear. In contrast, Tesla will require investors to recognize that the best long-term corporate strategy for keeping competitors at bay may involve steps that hurt margins in the short run. As a Tesla investor, it's important to realize that Tesla's business model is unique and successful because it combines major competitive strategies, such as direct sales, servicing, and charging networks to create a customer value proposition. This model aligns with its mission of promoting sustainable energy and transportation. Tesla's business model is flexible and scalable, adapting to changing customer needs, preferences, and new opportunities and challenges. Therefore, we believe that Tesla's business strategies, like the recent price cuts, will stand the test of time and help it continue to dominate the EV industry. What do you think? Let us know down below, and don't forget to tell us your evaluation of Tesla. If you want to know more about what Tesla's been up to over the last few days, click on the next video on your screen. See you there.